Have you ever wondered where to start from to become a homeowner in the United States of America? If you've been having all these questions and you don't know where to start from, this video is for you. Today we're going to break it down, how to get you prepared from start to finish, talk about the process a little bit so that you can have this in your plans to be able to buy a house in the near future. My name is Elsa and I'm a realtor here in Houston, Texas. So we're going to start from what are the basic requirements that you will need to be able to qualify to purchase a house, to qualify for mortgage. So the first thing that will be required is a 2-year work history. A lot of people can relocate and move to live in the United States and ask themselves, so do I have to wait for 2 years to be able to qualify to buy a house? The answer is no. As long as you can provide some information from your previous employer, from where you were working before you moved here, that can answer the question of 2-year work history requirement. Remember, I said 2-year work history. I did not say 2 years working at the same place. So as long as you don't have big gaps between your employments that are unexplainable, that means the lender will not have give you a very hard time trying to get that history for you to be able to qualify. So if you had anything, for example, like a medical condition or something happened to you that you had to be off work, they'll just need some documentation about that if you had a gap in that 2-year work history. So the first thing we mentioned is 2-year work history. We're going to talk about credit score requirement. An average credit score of 620 is what will give you a better interest rate. The higher the credit score, the better. But now the government introduced a new requirement that they don't have to qualify you according to a credit score, but other factors are going to come in play, and it's the work of your lender to be able to help you to answer those questions and see, in place of that credit score, the other requirements that are required on top of that, what exactly are they, and will you be able to have those? Bottom line is, you need to take care of your credit, make sure you pay your bills, make sure you don't have those past due bills. And if anything wants to happen to you, make sure that you communicate with those lenders, the creditors, the banks, and let them know that you're having a difficult time so you can see which payment arrangements they can offer to you. When we talk about credit score, some people who move from different parts of the world might not have the same credit history like it is here in the United States. Some of us, some countries that we come from, we don't like to be in debt. So when you talk about getting a credit card that you can have even up to $20,000, $30,000, or even just $5,000 to begin with, we don't like to be in debt. We don't like to have those credit cards. But unfortunately, a lot of things are set up in the United States whereby credit score is going to play a major factor for them to be able to approve you or for you to be in a position to purchase them. So when you move to the United States, if you don't know what a credit card is, you might need to work with your bank whereby you prepay, let's say $500 for them to give you credit. Let's say they will give you a credit of that $500. And then if they see how you use it and pay it back, they will increase that limit for you until when they can refund the $500 and increase your credit limit. When you have those credit cards, what is going to help you the most is, do not overuse your credit cards. Do not max them out if you don't have to. Just try to use not more than 20%. And if you're not a credit person that does not like to use those credit cards, use it for something like fueling your gas or buy groceries with it. If you spend $250, pay $230 and leave the remainder $20 or $30 as a balance. Therefore, that will help you build a revolving credit faster and sooner for you to be able to get a credit score, to be able to maybe even finance a car or be in a position to purchase a house. So that credit score is a very, very important thing. If you have any questions about that, always DM me, ask me for a recommendation or how to go about building your credit score. And then the other thing that will be required for you to have is a down payment. So there are different programs that you can qualify for depending on who you are in terms of career-wise. There are zero down payment loan programs for people who are like physicians, doctors. The third thing we're going to cover is down payment requirement and closing costs. So there are different loan programs, which is the work of the lender to see which one you can qualify for according to your profile, your income versus debt ratios, your credit score, and everything that's required for you to qualify. So there is an FHA loan, which minimum down payment is 3.5%. So 3.5 divided by 100 times the price of the house that you want to purchase. Therefore, that's how you calculate for you to get your down payment requirement amount. That is for FHA. According to conventional loan, it's either minimum down payment over 3% or 5%. Also, there are other zero down payment requirement loans that you can qualify for. It just depends with your profile and your credit score and debt to income ratio, your career, and a few other factors. There are zero down payment programs available for first-time home buyers, whereby they give you grants to cover your down payment requirement. It's always good to get yourself prepared, save some money, so that when that time comes, you and your lender can work to compare if you get down payment assistance or if you spend your own money to pay for your down payment, what will be the difference in your monthly payment? Sometimes when you get the down payment assistance programs, your interest rate can be higher and you cannot really influence how high the interest rate can be if you're going to utilize the down payment assistance programs. There are other programs also that if you use for your down payment, it does not affect much how much a monthly payment is going to be. So it's a good thing to compare and know exactly what you're getting into, if it's a better deal for you or if it's better for you to just save your money, get you prepared so that you can have your own down payment and you can get closing costs from somewhere else. So that is the down payment requirement. You don't have to have 20% as a down payment for you to be able to purchase a house. I know there is that myth that people think all the time, you must have a 20% down payment for you to be able to purchase a house. That is not correct. So with the minimum down payment, you can be able to afford to purchase a house. When we talk about closing costs, you can always estimate your closing costs to be around 3% price of the house. So if you're purchasing a house at $300,000, for example, that means your closing cost maximum is going to be $9,000. Depending on the property that you're purchasing, if it's a new construction, builders offer to cover your closing costs. So maybe you don't have to pay anything at all, or a little bit will be left that you'll have to pay. Also, if you're purchasing a resale house, meaning it has been lived by somebody else, we negotiate all the time for the seller to be able to cover the closing cost on your behalf. It might not cover everything, but maybe most part of it will be covered. So if you have your down payment, we need to hustle for the closing cost, or if the builder covers for it, you are really close to becoming a homeowner. So once you have met the requirements we just mentioned, the lender will ask you other stuff, for example, like tax returns. If they need to verify your income, they will do verification of employment. So that's the work of a lender. At this point, you're working with a lender and he's helping you to be able to qualify to purchase a house. So any paperwork they ask you, it is your duty to provide it to them so that you guys can work together as a team to be able to achieve the goal of being a homeowner. A lender is not there to write you off or to do anything. There are guidelines that must be met. So for the lender, he's helping you to meet those guidelines to be able to qualify for a mortgage. So whenever you're working with a loan officer to be able to qualify for mortgage, work together as a team, because that's how we're going to get you to a closing table and have keys to your home. After we cover all this, you have provided all this documentation to the lender. They will give you a pre-approval letter showing you how much you can qualify. It is always very important to start with this step of getting a lender pre-approve you, because you don't want to go home shopping looking for houses, yet you don't know how high your pockets can qualify you for. You don't want to go look at houses and fall in love with really nice, expensive house, and then once the lender does your pre-approval, shock to you, you don't qualify for that house that you had really fallen in love. And then once you do that, your brain just gets stuck with that nice house, but your pockets cannot reach there. So don't skip these steps. Let's walk you through the process from start to finish, make everybody's life easy, yours as well. Therefore, you can become a homeowner and make this process very easy for you and doable. So once you have the pre-approval letter from the lender, we do what we call a home search. Home tours, whereby we list down what you really want to have in a house, must have, and some things that are nice to have in a house. Once we know what all those basic stuff are, we search for the houses for you, and then we take you for the home tours. When we are doing the home tours or the house search, some of the things that you need to pay attention to is schools for your kids. If you have kids, make sure you do research and find out how the schools perform, any information you want to know about the schools. Just have an idea of how they're doing, and just maybe that will help you zero in an area that you want to buy the house in. Also, where you're working, how is your commute going to be, the safety and security of the area, and also the amenities. So if you're somebody who likes outdoors, what areas do you desire more than other areas? When you put all these things together, it makes it easier for you to zero in an area and find out exactly which neighborhood you want to be in. When we look for houses, also, you need to figure out if you are somebody who likes new construction, newer construction, meaning it was built within the last 5 years or so, or if you don't care about how new the house is, as long as the condition of the house is good. If it has been well maintained, the AC has been serviced, there's no issue with the roof. So those are some of the things that you need to know on your end. If you purchase like an older house or any type of house, there are some things that we will cover during inspection, because once you find the house that you like, now finding out exactly the condition will be done by an inspector. So inspector, you're going to pay for an inspector to perform a third-party inspection. What they do is they look at everything in the house to really help you make the right decision whether that's the right house for you or not. When you do inspection, you pay attention to things like how old is the roof, HVAC system, HVAC AC system, plumbing for the house, are there any blockages, foundation and structure for the house, electrical work, because at the end of the day, these are some of those items that are going to be the biggest ticket items in the house. If a house has an older roof, just know that it's going to cost you anywhere close to $15,000 and above for you to replace a roof. Is this a cost that you're willing to carry forward with you or not? Also, stuff like the roof will determine how expensive the homeowner's insurance is going to be for you. So it's very, very important for you to be keen and understand this process, just even the basic things, so that when you go on house shopping, these are the things that you need to pay attention to. Write down your own list and ask your realtor, how old is the roof for this house? How old is the HVAC? How frequent does it get serviced? How old is the water heater? Because you don't want to move into the house after you close, there is no hot water for you to shower. So these are some of the things that you need to pay attention. We help you during that process to break it down and make sure that you're making the right decision. Once we pass the inspection, the house is, you're most likely moving forward with the deal, and the lender does order appraisal. So appraisal will be to determine what is the cost value or estimated value of the house, so that whenever they are funding, you're getting a mortgage for it, you're not overpaying for that property. Sometimes houses can be overpriced, and you will not know that they are overpriced unless an appraisal is done by a professional appraiser. So they'll come to the house, they will run what we call comparative market analysis for them to arrive at a value for the property. So instances that can happen is the property can meet the appraisal value, meaning whatever you went under contract for, it appraises for that amount. Also, what can happen is the appraisal value can be lower than what you went under contract for. In that instance, there's always different options that that can be done to address the under appraisal on the value of the property. One can be negotiated with the seller to match whatever the value that the property appraised at. The second thing can be to pay out of pocket if you really like the house and the seller does not want to reduce the price to meet the value, or you can walk away from the deal. So just know that there are options for you that you can do in case your property does not meet the appraisal value. But they will do appraisal and they will send you a copy as a home buyer who is the buyer of the property in this transaction. Once the appraisal has been done, the lender will be working behind the scenes, making sure they have the verification of employment from your employers, current employers, past employers, and all that, asking you other questions. If all that has been met, then that means you'll be preparing yourself for closing. In different states, I know closings can be done by attorneys. Here in Texas, we do them at a title company. So they'll tell you, prepare yourself, you have a clear to close for you to be able to present yourself at the title company and sign all those documents and become a homeowner. On the closing date, they will have you bring your copy of ID and check, or you can wire funds to the title company for the closing and the down payment. All this stuff are communicated with you throughout the process so that when it comes to closing date, there will not be any surprises. Once you close on your house, we're going to discuss on our next video what will happen. I hope you enjoyed this session. I will see you on the next one.